Welcome back. Our next session is very relevant for these times. If there's one concern that everyone across the world shares, it's about the economy. During the last couple of years, that's one concern that everyone's had about surviving the pandemic. And now they're thinking about how world economies are adapting to the new world normal, where variants threaten to shut down flights and thereby economies. In this context, our next speaker, former Treasury Secretary Lawrence H. Summers, one of America's leading economists. He's currently Professor Emeritus at Harvard and served as Secretary of Treasury in the Clinton administration. He also served as Director of the White House National Economic Council in the Obama administration as the Chief Economist of the World Bank. It's over to my colleague and Mint editor Sruthijith, who's in conversation with him. Over to you.
Thank you, Sunetra. Professor Summers, a very warm welcome to the Hindustan Times Leadership Summit. It's great to have you with us this evening here and morning at where you are.
It's great to be back with the Hindustan Times. I remember having the privilege of accompanying and attending your summit in 2015 in person, and I look forward to the moment when it will be possible for me to return to the Hindustan Times and to India. Yours is a remarkable and important publication, and I'm delighted to be part of what I think will be and hope will be a very interesting conversation.
I hope so too, and we really look forward to the time you're able to come here in person as well. This is a special conversation, partly because Professor Summers has been the forefront of one of the most important public policy debates of our time, which is what is an optimal public policy response to the pandemic and to the ensuing economic challenges. Professor Summers, you have been arguing for a very long time now, more than 18 months now, that the US stimulus could cause persistent inflation. The response, especially from the Fed, has been that the inflation is likely to be transitory. Yesterday, we had a very interesting statement from the Fed Reserve Chairman, Jerome Powell, who said that it's time now to retire the word transitory in the context of describing inflation. Did you find that interesting? Does that end the debate? And what are your concerns about the fallout of persistent inflation in the United States if that comes to pass?
I was glad to see Jay Powell's statement. Glad to see Jay Powell's statement because I think it's been a mistake for some time now to think of inflation as only a transient issue. Glad to see it because the term transitory had come to be used in so many ways that it had almost lost its meaning. My own view is that the combination of a wartime level of fiscal stimulus, extraordinarily easy monetary policies, pent-up savings from the time when people weren't able to spend due to the pandemic, has lit a rocket fuel under the American economy's demand at a time when, rather predictably, supply was going to be constrained by various continuing impacts of the pandemic. And all that demand facing limited supply along with massive liquidity was, I thought, a prescription for very substantial difficulty. And indeed, looking at the 11% annual rate CPI measure we had last month suggests to me that my concerns were largely warranted. I have no doubt that some part of that 11% inflation has a transient element. I think it would be a serious mistake to suppose that we were already back to where we had gotten in the 1970s, much less that we were in some kind of Latin American situation. But I do believe that inflation is now set unless there is an interference for running at a level well above our 2% target. I believe that looking at a labor market that's at an epic level of tightness, as measured by job openings or quits. I believe that looking at a housing market that shows nearly 20% inflation over the last year, the vast majority of which has not yet been reflected in our price indices. I believe that talking to businesses, almost all of whom say the same thing. We're having huge difficulty getting labor. We're having serious problems getting components. And we're encountering very little resistance when we pay more to get those things, and then we pass the prices on to our consumers. All of that suggests to me a rather severe inflationary psychology developing. I don't know what the impact of Omicron is going to be. It's too early for anyone to know about that, I think. But it's important to recognize that because Omicron affects both supply and demand, it is not likely to have an immense impact on the rate of inflation. My own instincts are that, to put it colloquially, it will reduce the number of people who want to be bartenders by more than the number of people who want to go to bars. And that means it could tend to be inflationary. So I think we are going to have to act in the United States to restrain the economy, at least relative to the current accelerator on the floor posture. And that's a very delicate operation. Historical experience suggests that when unemployment rises a bit, it tends to rise a lot. So I think the Fed, by being somewhat late in its diagnosis of the gathering pressures, has given itself a very challenging assignment going forward. But I think they are extraordinarily able people who have met very difficult challenges before. And so I am hopeful.
This has been, of course, a challenging time for any economy anywhere in the world. We have seen a lot of distress and challenges. In your view, countries have all mounted their own unique mix of measures as a response to the pandemic challenge. In your view, which are the ones, or which are the approaches that you think got it right, and which are the ones that you thought wasn't quite great? Is there such a thing as an optimal mix of measures under such circumstances?
I have been struck that our view as to who has done extremely well and who has done extremely poorly has tended to vary over time, and that we tend to think of certain countries as being very well positioned, and then they do much less well. And so I've come sort of reluctantly to the view that this is headed towards being an endemic disease, that more or less everywhere, most people are going to end up having to have some kind of immunity from some combination of vaccine and from having had the disease. And that better strategies or different strategies probably affect the timing of the suffering somewhat more than they affect the overall level of the suffering. In general, I think the evidence is increasingly that restrictions on mobility are transient in their ultimate impact, and that success depends more on getting jabs into arms, masks onto faces, and tests into noses. If the endemic consequence is going to be realized. India certainly had an agonizing time at early stages in this, but I have to say, when I had the privilege of meeting your finance minister and hosting her at Harvard, she explained to me that by the end of October, India was going to have gotten 1 billion jabs in arms. I thought that was a quite extraordinary accomplishment of which India should be proud, and led me to think that when one looked at the end, one might see quite a bit that was positive in the Indian experience. I have a concern that the Chinese approach of simply shutting down the country, of shutting down substantial swaths of population upon the discovery of individual or a small number of cases, may be setting the stage for a very difficult situation, because the reservoir of immunity in China, behind the near zero level of cases, behind the rather weak Chinese vaccines, and the reluctance to import international vaccines, is creating a situation from which exit will be extraordinarily difficult. So I think it's, to use the old professor's line, the only grades I can give any country at this point are incomplete.
But are there specific economic policy measures that, by this point, having seen the impact of many of them playing out, that you think could be universally prescribed, whether it is wage support, whether it is an expansionary monetary policy? Are there specific prescriptions, policy prescriptions, that you found to be something that could be universally prescribed?
I hesitate to universal prescription in a world of highly differential diagnosis. My own instincts would run to supporting incomes to something just below trend levels of income. I think in the United States, we overdid that and supported incomes to the point where disposable income in 2021 was substantially greater than anyone would have expected it to be prior to the advent of COVID. And that's what I think generated the inflationary pressure. I think there are other countries that have done much less to support income. But I also think any judgment about appropriate income support has to be contingent on a country's fiscal situation. And that is a substantial variable across countries. But my own sense is that generalized income support is a better strategy than greater focus on monetary policy. I think it is better targeted at the vast majority of the population rather than at asset prices. I think there is a tendency in a moment like this for investment to be relatively interest insensitive, and for whatever stimulus comes from monetary policy to come primarily from inflated asset prices, which may be both problematic in terms of economic efficiency and somewhat perverse in terms of its distributional consequences. I think the easiest judgment to reach, SK, is that the world needs to be investing much more in bringing this pandemic under control, and that we all can be investing more in producing vaccines, producing tests. And what has been a particular priority of mine, and what I'm very fearful will be neglected, is that we will not take this sufficiently as a warning, and we will not put in place the systems that will be responsive the next time there is a pandemic, which I think has to be regarded as a substantial probability.
To quickly go back to the Fed press conference yesterday and to Jerome Powell's statements, he talked about the potential of, he said that potentially we might accelerate the taper. That's, of course, for those of us in emerging markets, that's always a scary word to hear from coming out from the Fed. As you know, emerging markets were roiled in 2013 in the episode that we now call the taper tantrum. In your view, what might be the likely impact this time around of the taper on financial markets and asset prices worldwide? Would it be different from 2013? Is the world a different place now?
I think the world is a different place. I think any withdrawal of taper that comes will now be the most widely anticipated withdrawal of taper in the history of the world. There's an old adage, buy on the rumor, sell on the news. There's a corollary, sell on the rumor, buy on the news. And I think that this has been so heavily telegraphed and so substantially discussed that I would be surprised if in its immediate aftermath of a taper, you saw the kind of shocked response that we saw in 2013. So I think, if anything, the 2013 fears have contributed to the maintaining of QE for too long a time. So I think it's quite possible that there'll be a kind of technical phenomenon of, oh my God, we had the taper and the world's still here, everything's going to be okay. I think a more profound concern that I would have to a significant extent for emerging markets is of a rather different sort. And it is that once the taper has happened and interest rates start to rise as the Fed follows on with tighter monetary policies, debt service has been enabled for companies and governments alike by very low rates. And as those very low rates give way and debt service costs rise, I do think that will be a source of strain. And so I think any prudent government or prudent corporate treasurer will be thinking about that need in this kind of moment.
Professor, what is your outlook for the prospects of the Indian economy in the medium term as well as in the long term?
I don't know. I have, for a very long time, I have been rooting for the Indian economy, and I have been believing in the ultimate economic power of India. I believe that rule of law, that vast entrepreneurial energy and capacity, that facility with things digital, that a remarkable NRI diaspora are all sources of potential economic strength. I believe that the relatively low level of income in India, compared, for example, to China, offers substantial potential for catch-up growth. So I am hopeful that India could see 15 years of growth that approaches 10%. I believe, unlike the vast majority of countries in the world, that's possible for India. But I believe that that requires public policies that have historically been difficult in India. It requires a government that is not just energizing and reforming of the economy, but is prepared to liberate the economy from government stricture and control. It requires a sense of political stability. I'm not sure that India's friends on the outside are as confident in India's ability to manage challenges related to ethnic division as they might have been confident in India 10 or 15 years ago. That's hardly a phenomenon that's unique to India. Look at all the challenges that we are having within the United States. Look at challenges that are taking place in Europe. I think there are also real challenges for India of effective state capacity. I don't know the facts. I have been told that in substantial parts of India, on a random Wednesday, a quarter or a third of the teachers who are supposed to teach in schools don't show up, but receive salaries nonetheless. That is not what lays a basis for success in the modern world. So, as one would expect of a democracy as large as India, there are these contradictions. And I think it's a hugely important story for the world what happens in terms of the play out of these contradictions. But in terms of potential for extraordinary performance, I think India, by virtue of its current level and by virtue of its facility with what is the most important development of our time, which is things digital, really stands out as having the potential to be the story that when the economic history of the second quarter of the 21st century is written, is dominant. But I can't quite go so far as to make that my prediction as to what will happen, given the challenges that I just described. I do know that India has many, many friends around the world, and if it can find the internal will to drive forward in the ways that I just described, there will be immense support and immense preparedness to engage in my country and in many others.
Would you say then that India could perhaps be an exception to the phenomena that you described in a 2014 paper with Lan Pritchett titled Asiaphoria Meets Regression to Mean? That could it break out of that? The weight of history, as you described, is in favor of the idea that economic growth over a long period of time will regress to the mean. Do you think this could be, or are you tempted to, at this point, view India as a potential exception, at least for a
we wrote that
time?
in 2014.
Right.
India has done some regressing to the mean since the time when we wrote that paper, and therefore there's less room to regress to the mean than there was when we wrote that paper, and a bit more potential for takeoff than there was when we wrote that paper. But I do think there is the possibility of real takeoff in India. It's not a small thing that over all the years since 1979 until quite recently, there had not been a single year when India grew as rapidly as China. But in the last several, there have been years when India grew more rapidly than China. And I think that is a hopeful harbinger of things that might come. I think that if there is a country that pioneers convergence to modern cutting-edge standards of living in the information age after the industrial age, India has as great a potential as any other country of size to do that in the period ahead.
Great. Want to quickly pivot to the question of cryptocurrencies. India at this point, like several other countries, is grappling with the question of how to treat cryptocurrencies and how to regulate them. Number one, what is your view of cryptocurrencies and their place in the future of money? Number two, how should countries, what should they keep in mind while considering regulating cryptocurrencies, if at all they should be regulated?
I think there's a core principle that should animate thinking about cryptocurrency, which is cryptocurrencies are a new means. They're not an end unto themselves. And cryptocurrencies should be tested in the market on a level playing field. There's no reason why it should be easier to launder money with a cryptocurrency than with cash. There's also no reason why the blockchain should be opposed rather than more traditional payment rails. And so the principle should be neutrality. You can't avoid money laundering rules. You can't avoid know your customer rules. You can't facilitate the evasion of taxes. You can't find it easier to engage in illicit transactions because you're using crypto. But equally, economic freedom requires the freedom to innovate. And as long as that principle of neutrality is respected, there's no reason why I shouldn't be able to make a transfer of funds to you using whatever technology I wish. And so I think it is that principle of neutrality that is the central principle we need to use in thinking this through. I think that will take us to a modest, to a middle way kind of position. It will be more permissive than the entrenched financial interests that don't want to see disruptive innovation. And it will be rather less permissive than the libertarians who are so committed to crypto that they'd like to see it succeed, not because it's overwhelmingly meritorious, but simply by virtue of the fact that it permits evasion of a variety of traditional rules.
Just to be sure that I understand, when you say neutrality, do you mean that the state should treat fiat and cryptocurrency at an even keel or give them a level playing field?
That is what I mean, but I think the question is, what does it mean to how does one give that idea of neutrality content? We have all kinds of rules about what happens if you walk into a bank to make a large deposit and seek a cashier's check. What is the analog of that for crypto? We have rules on carrying large amounts of negotiable instruments in and out of a country. What is the analog of, what is the right way to think about the analog of that with respect to crypto? This is, I think, the very formidable intellectual challenge. But I have little doubt that the blockchain and the capacity for parties that don't trust each other to engage in exchange will be a very valuable technology that will help drive the world forward, in the same way that the invention of alternating rather than direct current was transformative in enabling industry and changed the architecture of the way the world worked.
Very, very quickly on the question of the trade situation or the tariff wars between the US and China, started by President Trump, but seems to be continuing under President Biden. Does this mean this is now a policy stance with bipartisan support in the United States? And if that is so, what would be the consequences of diminished trade between two of the world's largest economies?
Is a policy with bipartisan support, which does not make it a wise policy. But the fact that it is an unwise policy does not mean that it can be reversed instantly, except in the context of effective diplomacy between the United States and China. I do think it is important to understand that our tariffs on China are at this moment raising the price level in the United States and therefore contributing to inflation, are reducing the competitiveness of many American producers who are finding that they have more expensive inputs. And at a time when the economy has more jobs than it has workers looking for jobs, are not contributing to raising the level of employment in the United States. And so figuring out how to get to a new place is, I believe, an appropriate objective of public policy.
In your career, you would have mostly seen a sort of relentless expansion of the forces of globalization. But now, with the rise of insular and national politics and in nationalist politics in several parts of the world, do you see a retreat of those impulses?
I think it's important to recognize that what happens with respect to globalization reflects both politics and technology. And the way in which we are having this conversation, which is entirely natural for both of us. I didn't get on an airplane and fly for a day in order to be part of your event and sit with you on a chair, jet lagged. I woke up, put on my jacket, walked upstairs, and sat in my study and found myself with the immense privilege of being in dialogue with many people in India. That wasn't something that would have been imaginable 4 years ago. And so I think as we think about globalization, we have to recognize that there are going to be a set of political tensions, but there's also an enormous tidal wave that is being released by technology. And which way that's going to go is very difficult for me to judge. But I temper my concerns about politics with this tremendous sense that a world where the vast majority of adults will very soon have a smartphone and be able to be in touch with everyone else on the planet and be able to have access to a far vaster array of knowledge far more quickly than a Harvard professor sitting next to Harvard's great libraries could have had half dozen years ago. I think that is a very, very large force driving towards integration. And it gives me some sense of ultimate optimism.
Professor Summers, with that, I think, albeit reluctantly, but we have run out of time now. It's been an utterly fascinating conversation. Thank you so much for joining us here at the Hindustan Times Leadership Summit. It's been a real pleasure to be in conversation with you. Thank you.
The privilege has been mine. Thank you very much.
Well, thank you both for this great conversation. And that just about wraps up day 2 of the Hindustan Times Leadership Summit. Don't worry, of course, we are going to bring you stimulating conversations like this all through the week till Saturday, which is our final day. And there's lots to look forward to tomorrow, including our speakers. Former Chief Justice of India, Deepak Mishra, will be one of the star guests. So don't forget to tune in. Thank you. Thanks for watching. See you tomorrow.